where do we get the YouTube feed link, and I'm not quite sure how that works, but like I said, we're just sort of working our way through this. Let's see how we do this. Okay, I better not tinker with this right now. We'll go back to the screen share. Oh, I think you have to turn that off. And we'll go back to the basic site. So as I said, I'm just tinkering around with this, and the first few sessions are going to be a bit choppy. I hope you appreciate that. So let's see what this thing looks like right now. So I'm not quite sure. I'm not quite sure where it says the live video. Live now. Is this what we have here? All right. So I hope there we go. That. Okay, so it looks like we are on the air, and I am going to post. YouTube live feed for Toot session 03/30/14. Paste. Okay, so that should work. Okay, and when we pop that up we are. Good. Okay, so it looks like we are live and we are on the air. So welcome everybody. Who do we have here? We have Chris, we have McSheesh, and we have Robert. So as you guys, people that have been in these tuts before, will know that basically this is just a 2-hour session for you to pick my brain. If there are questions that you have, could be on the website itself, could be on the algorithms that I run. I run one basic broader market algo that tells me what I should be looking at in the bigger picture, and it follows, just to give you a little bit of overview. It's called the Delacour Index, is the broader market algo that I run. And it basically tells us what we should be buying, what we should be selling at any given point in the market. It's based on 9 different technical indicators, a cumulative score of the technical indicators over the daily, weekly, and monthly price charts. The cumulative technical score is plotted, and then I plot 2 moving averages on the technical score. And as you can see just from the chart, this is the front page of this algorithms site that's on my website. And as you can see, we cover over 240 as of last count in the entire universe. These include exchange-traded funds, country funds, the Dow Industrials, Transports, Utilities, the S&P 100, TSX 60. Basically, it's a bullish percentage reading that I track for sort of my market breadth indicator. And at any given time, you can see what the bullish and bearish percentages are in each of the different sectors followed. The best way to use this tool is, as you can see, when the market gets overly bullish or overly bearish. All of these bars in an overly bullish situation, all of these bars go green. Overly bearish, all of these go heavily red. And when you see heavily red and heavily red both on the short and medium term, those are usually fantastic market bottoms. And conversely, when everything's overtly green on both the short and medium term, it's an excellent barometer for market tops. Individually, the securities, the little algorithm basically spits out short-term signals and medium-term signals. And then if we get a short and medium-term signal together, that's what I call a DI setup. Basically, the market's moving strongly in one direction, and the little algo basically takes positions off of that. When we look at the broader U.S. stock market, we see that cumulatively the S&P 500 is still up, but on a daily basis we're down. We actually have a short-term sell signal working here off of this short-term pattern, and a short-term sell signal working off of the longer-term pattern. The bonds, very strong cumulative reading. Daily and weekly, they're very strong. Monthly, however, the trend is still down. Again, there's the corresponding buy levels. On the gold, conversely, we actually have a cumulative negative reading. Daily, weekly, and monthly are all very negative, so really not too excited about the gold market right at the moment. And on the oil market, conversely, cumulative reading quite bullish. Daily, obviously, as you can see by this price chart, is bullish. Weekly and monthly are also. So short-term signals, we have a nice little buy here working on from the 26th, and a sell on the medium term. I like to just give a nice cumulative reading of the technical signals on this front page, so you can basically see what sectors are attractive. Obviously, big green ups or big blue ups are bullish, and big blue, red downs are bearish. And so this is a nice little footprint to start your day off with. On any given daily basis, and yeah, I guess that's right. The algo will spit up buy and sell signals based on cumulative technical readings. And if you want to dig more into this, the screen results, the actual watch list, the entire 240 stocks, the individual scores, and that really fine-tuned stuff, and then get that report in your email. That's a subscription basis. But you should also keep in mind that in the trading room, and this is free access, you can simply zip into here, and all of the DI scores are actually nicely summarized in this one page that I put together. So when we're in the trading room, if you just scroll down to the DI screen standouts, and my web hoster actually shifted to a cloud-based server, and I noticed things have slowed down quite a bit, so I'm a little disappointed in that. But in essence, as this page loads, so it's still loading here, a little disappointed in what's happening here with my server, but that's another conversation for another day. If you go to this, basically here, we'll go back up to the top. This is the trading room, and if you click on DI screen standouts, basically this is the list of all of the stocks that are referenced as of the last screen results. And if we just look at the top US ETFs, here's the EWIs, the XLEs, EWPs, etc. You can see they're all bullish action. Bottom ETFs, there's the silver, there's the Japanese yen, there's the gold basket, there's, I guess, the GLD, that's the gold itself, and here's the inflation protected notes, the TIPS. So very good little summary here, and all you have to do is just mouse over your screen. And then what I've done is, let's say we want to look at something in particular. I'm really interested in this high flyer, Oracle. So we just click on Oracle itself, and this is all server-side scripting. So when we click on that, the server is basically told to load all of the charts. This happens to be the daily analysis. You can change that to weekly, monthly if you want, but here's the daily charts. And then on the side here, I have basically the BATS real-time prices, so you can basically watch the market in real time. And then if we want to actually look at a chart nicely, I've just embedded here a little trading view chart so we can see. And really, you know, not a big surprise why Oracle would be on the top flyers list, because frankly, this is a pretty strong looking chart, eh? So that's just a nice little summary of that algo and how you can use it on a daily basis, and you don't even need to actually subscribe. You can get all the information through the trading room page, which is free. Let's see. So we have Tim. Hello, Tim. Continuing the theme here, just reviewing some of the site features that I'd just like you guys to be aware of. Again, this is the tutorial session, so all I'm doing is just outlining the tools that I use and answering your questions. Just to finish off the algorithms, I wrote another program we called it the WDB options model. WDB simply are the initials of my father. He's the Mr. Investor that we refer to here. What I really like about this algorithm is basically it just hunts the stock market for extremely low valuation stocks. Basically stocks trading at less than 10 times PE, less than book value, and less than 3 times cash. And, you know, by the way, you know, if you do less than 3 times cash, then obviously a good portion of this book value is actually cash itself. This algorithm in particular hunts for options trades where if you write the put option, the premium collected, that would be this, is greater than the margin requirement required to hold the stock on margin if you got exercised. So in essence, in this just screenshot here, these 3 stocks, if you wrote these put options and were exercised, the margin requirement to hold the position is less than the option premium collected, so in essence you get paid to hold the position on margin. And you know, here this was PWRD, for example, and you know, if we pull up the PWRD, because the valuations were so extremely low, actually let's we see that, and this just happens to be an example of one that we did, PWRD, pull up the weekly chart, and this, you know, this screen result, just for illustration purposes, you see it was on March 2nd, 2013. So that actually spat up the signal for us to get interested, basically here. So you can see that if you had written this put, then you probably would have been exercised. You would have had to hold the stock on margin. You maybe would have taken heat for maybe the next month, you know, depending on, you know, what the expiry was. This option in particular was a June option, so you know, that basically meant that the option itself expired here. And keep in mind that this option in particular was the $18 put, so even in June you still would have most likely been exercised. The strike price was basically 18, right somewhere in here. And you know, if you had written this option just based on this screen example, you would have collected $6.40. So your cost on the stock, the cash cost on the stock, would have been $11.90. What does that say? $11.94, which basically puts your cash cost here. And as we said, the margin to carry the position would have been 30% of this $18, which is what, $6, right? So your margin requirement, or where you would basically be underwater margin-wise, would be down here. So, you know, as this illustration points out, you know, your cash cost was never revisited, and you know, just using some simple technical analysis, it was, you know, fairly obvious that we would probably be looking somewhere in this $24 area. This is what's called the what I call the first stop target. Basically, that's the 38.2 fib, and you know, just very simply put, you know, if your cash cost is here and your target's here, well, that's a double on the stock. So not only did you get paid to take the position, at no given point in time did the brokerage house ever come to you with a margin call. Your cash cost for the stock was basically about $11. And we've already realized more than a double on this trade. And you know, just so you understand, as an OTE guy, really you could argue that you really shouldn't consider shorting until we get up into this neighborhood. So while I would use this as an ultimate target up in this area, you'd be, you know, basically my premise as a broker is anytime you get a position that doubles in value, which in this case would have been $22, you should automatically sell half of the position. So basically, you should be, from this point on, into a risk-free position where basically you're just playing with the market's money. So that's just a brief overview of my algos that I use. Both, as I said, you can go into the trading room at any given point in time and check out the DI screen results, and this WDB options screen is still basically in beta format, which means that this is for free. So you can enter, you know, if we just zoom this in a bit so you can see, all you need to do is enter your email address, confirm it, create a password that you'd like to use, enter in the security code just so we know that you're not a bot, and away you go. You get this report in your email, very customizable on a daily basis. The actual email itself, just to give you an idea of what they look like, and I don't really mind you looking at my email, but basically it looks something like this, where you have a watch list of stocks that you watch. So this is basically a dummy basket that we of all the signals from last year. You know, we can go through one by one of them, and you can see here's DRYS. I mean, this signal came in way lower, and we got way more than a double on that. You know, the list goes on and on. SSRI just finally started to perform, but basically that's a double. The Thompson's still lagging a bit, but anyway, long and short of it here is your report, and this was the report generated most recently, will basically, this is the entire universe of stocks from lower risk all the way up to higher risk, based on these criteria, and every day in your email you get a nice little summary of what stocks are meeting the criteria. And this is basically where I hunt for my value trades. So when you see me produce a report, for example, recently here, I produced a report on GFA, This stock came up on the WDB options report here, and this is basically last summer. So, you know, it's an excellent example where, in essence, you could get paid to buy the stock. Technically, it was in a nice little buy zone. We had a nice bottom come in here, technically, right on the WDB event. And if you look at what's happening here, number one, our cash cost has never been revisited. Here's our cash cost way down here. And now, if you look at this stock, it's starting to take off. You know, like if I do a chart like this of GFSA or GFS, I think is the symbol. GFS. Nope, that's not it. GFA. Let's try that again. There we are. We can see that this, I mean, from a value perspective, this is a very compelling idea. You know, I mean, certainly wouldn't be expecting a run back up to the old highs, but, you know, a nice simple technical retracement of these lows, you know, our first stop target is up here at $8.24, and here we are sitting at $2.90. So even from these levels, there's lots and lots of room for this thing to run. And it's a Brazilian play. So that sort of continues the theme that I've been sort of on of late. We have the Brazilian World Cup coming up, and it's my general feeling that people are getting a little bit more excited about Brazil. Their currency in particular is looking quite healthy, and I'm seeing buying interest come back into these names. Another stock, and I was just going to pull it up here, but I recently did produce it, but I'll just fire it up here now. What's this symbol? PBR, I believe. Petro Brazil. I did a write-up on this thing right here recently, and just last week I did the write-up. But you know, if we just do simple technical analysis, you can make a fairly sizable argument for, you know, I'm not looking for the old highs, but I think it's perfectly realistic to look for, you know, 26 bucks a share. That to me isn't totally out of the question. And you can see that just in the past week, in fact, the past couple of weeks, we've had a massive volume surge here, and the silly stock rallied almost 30% off of the lows. And the irony of it all, and just what kills me, is that I produced this report. Let's see if I can find it. I produce a lot of charts, so bear with me here. You're in here somewhere. There it is. So the WDB told us to start getting interested here when the stock was $10.46. That's when the market started to tell us to pay attention. I find it interesting here that they didn't show the fibs. And I mean, look at this. Right after I produced this silly report, the silly market just took off right off of this report. So I don't know whether I moved the market or the market's moving me, but the good thing to see here is that at least I'm thinking in the right direction. Here is the saved chart of that PBR. Maybe it'll show us the fibs that I had. You know, so the algo itself is hunting for a ridiculous value. So forward PE 5 times earnings, price to earnings growth 0.39, price to sales 0.49, price to book 0.45, price to cash 2.65, and they're paying you a dividend along the way. The actual option itself was the $18 put. You collected $7.20 in a premium. The margin requirement to hold the stock is $5.40, so basically you had a nice 33% premium. Here's the cash cost cash cost of owning the stock. But keep in mind, we own these stocks on margin, so in essence, we got paid to do the trade. So that's just a summary of the algos. And like I said, both of these services are free. You just got to know how to get to the information, and along with the WDB options report, for subscribers, I produced this report on the DI and its results. That was basically the overall market algorithm, and these are produced in a nice daily report as well. For YouTube purposes, I wanted to just do a nice little blurb on that, and what want to make sure that you guys are seeing what I'm seeing here. Let's make sure. Okay. I got a funny feeling you guys didn't see any of those charts. Is that correct? Did you guys actually see the charts? Or did I have the wrong web page up? Oh, good. And keep in mind, I'm a total noob at this, so I'm still trying to figure all of this out. Okay. So that's one particular facet of what it is that I do. If you want to learn all of the different ways that I approach the market, you're more than welcome. And through yesterday's show, we talked about this course that I wrote and how each of the different parts of the investment process are examined. There's creating the tactician, trying to figure out, what your strategic plan is, what markets look like, how money flows work, investor sentiment, and then combining it all into the concept of rational investing. Part 2 looks specifically at fundamental analysis. So, that's talking about structure of companies, top down versus bottom up. Talk a little bit about the history of fundamental analysis. We get into what fundamental analysis really is, looking at growth versus value, and how different investors approach the marketplace. I'm a really big fan of understanding stock structure, which I personally don't think enough attention is paid to in the current marketplace. I suppose one good thing about these whole cryptocurrencies is, people are talking these days about the fiat currencies basically having, very poor structure. Tons and tons and tons and tons of US dollars are floating out there. So what's the actual value of each dollar? And that's very hard to gauge. And that's, sort of one reason why Bitcoiners are really excited about these cryptocurrencies, is the fact that there is a hard ceiling or floor for the outstanding stock. So that talks all about stock structure. I'm a really big fan of following smart money and the insiders. So, we talk a little bit about how we interpret what their actions are. And through this fundamental module, we look at 4 different models that I run. The WDB you just took a look at, that was hunting for deep value. CanSlim is another model that I really like, developed by William O'Neill. GARP, which is just simply growth at a reasonable price. And then I was taught a venture capital investment model by an old VSC floor broker, which I've yet to ever see this model fail. It's just so powerful. So those that are interested in the penny stock market, there are ways to play that as well, where companies have no earnings. And then finally, through this sector, we just look at how you actually build a fundamental tool belt and how you incorporate that into your plan. Part 3 of this course is specifically to do with technical analysis. I call it technical speaking. So basically, keep in mind this is a very basic introduction to the investing universe and how to properly invest. So this section in particular is how do we define technical analysis, talking about supply and demand, drawbacks and limitations, different types of technical analysis, why it's important to confirm by higher time frame. We get into the real nitty-gritty, defining what a trend is, trending versus ranging markets, what a trend changes look like, how you incorporate volume. Spend a whole section just looking at what indicators are, how they oscillate, momentum, the concept of convergence and divergence, and then how to incorporate that into your plan. We also look at intra-market analysis. So, not only do you look at individual securities technically, you can also look at relationships between assets. I'm a big fan of the Dow Gold ratio as sort of your market fear greed proxies. We take a look at the bonds and stocks and how they act together. We look a little bit at Dow theory, and with the concept that the transports basically should confirm any action that you see in the industrials. And we also look at market breadth. And as I talked about just in my my little algorithms, I'm a big fan of market breadth, because the market breadth actually is sort of like the internal technical structure of a market. So I find that very important. And then we finish this introduction, basically how do you incorporate this stuff into your plan. The last section of this course was basically what we covered yesterday through yesterday's show, and it's called Getting Personal, but basically it is more concerned with CRI's second rule of investing, and that is we should never really risk more than 5% of our stake on any one single investment idea. So basically this section talks all about fear versus greed in the marketplace, how we should look at risk. Sometimes one person's risk is another person's potential home run. So the cliche that I like to use is opportunity is now here. There's two ways to read this. You can read this as opportunity is now here, or you can read this as opportunity is nowhere. So it's really your perspective on risk that really determines your outcome. Some people would consider a crashing market a horrible situation. Others would consider crashing market a wonderful buying opportunity. We get into working with trading plans, and how if you have a plan, it actually removes a lot of the anxiety from the trade process. We talk a little bit about different ways of looking at risks and how you as a person handle risk, which is not talked about enough, in my opinion, in the current marketplace. And then, of course, as we say, with all of these, the real takeaway from these is how do you incorporate this information into your day-to-day trading activity. And then this section I finish off with two things. Number one, taking a look at trading as really a business. And I don't think enough people look at trading as a business. I actually consider it like the one perfect business in this world. But what are some of the key components to a successful small business operators? And then the last section, of course, is just putting it all together. The plan basically should have a strategic component, and it should have a tactical component, and we look at detail on how you put all those together. So again, as with the algorithms, all of this information is just sitting on the website, totally free of charge. You see, I didn't have to go through any paywall or anything to get that. And each of these, that was just in one massive PDF document. Each of these seminars is actually broken down into little snippets, where if you want online, you can take a look at each of the seminars individually. So lots and lots of information. My publications, I produce about 4 or 5 blogs. If you go to my trading forum, you can see all the different blogs and archives that I have. If you want access to the message board and the archive and my new only doubles trade, I do a blog specifically for trade setups where I think you can double your money. These are part of the paywall, so you'd have to be a subscriber to get access to them. But you know, I do a blog on the S&P 500. And this is a very, very good model. It's just nice and simple. I do blogs on, I do a commodity trend survey, you know, as a proprietary crude oil trader. So basically I'm watching the entire market, and when I do these updates, these often lead to trade ideas. So for example, I noticed here that sugar prices were quite depressed, and so last fall, when we were down in this $15, $16 area, I actually issued a only doubles trade alert. And those people looking at my feed now will see that I recently published an update to that only doubles trade. Where is it? Here. Where basically we got our double. So this trade setup, the only doubles recommendation was put out here. And basically this is the commentary of the trade, and you're more than welcome to read how it went. But this is a fantastic service, and the irony of it all is that I could probably make more money just marketing this only doubles blog and the setups, but for some reason about 2 years ago I decided that I wanted to be a crude oil trader and a day trader for crude oil. And so I've basically spent the past 2 years literally fine-tuning my crude oil day trading trading plan. You know, I basically have like a trading plan that I actually implement on a daily basis, and I did a blog on this. I haven't updated it in a while, but because basically I have the trading plan now in place. And it's working very well, so I'm very pleased at that. You'll notice too here that what I do for the only doubles trades is new trades you're going to have to subscribe, but all old trades that have been closed out, I run a free blog off of these trades, and so you can go back and look over history to see how my only doubles trades worked. And so far we're batting 100% on them, so I'm very pleased with that. Having said that, I don't do a lot of posts for the only doubles trades. I probably should. You know, I would argue that you know, these trades here, buying a long call option on the perfect world in here would have been an easy only doubles, and I would argue same thing here. On this Brazilian oil stock, I think there's easily a double to be made on an options trade there. And I know for certain that another gentleman at TradingView, who he and I, Joe the Chasm, I love saying that, he's actually got a long option trade on here on this Gafisa. Because again, you know, from an options perspective, this could easily be a nice 10-bagger. You can buy a $5 call on this thing with lots and lots of time for like a nickel. So, you know, all that is saying is, you know, let's get a test of this key traffic area. And you can see that, you know, it's visited this traffic area lots. And he bought the $5 call at a nickel. If the market runs up to here, do you think this option is going to trade at a dime? You know, easily. You know, it'd probably trade up to $1, which is, you know, like a nice, you know, 20-fold increase. So if you're interested in those real power options trades, I would recommend that you tune into Monday's show and listen to us chat about real high leveraged option trades. at any given point in time, you're more than welcome to check out my schedule of upcoming shows. Basically, it's a nice, simple Google Calendar, and my goal has been just to fill out all of these sessions. And what I'm searching for is somebody who's really jazzed about penny stocks, and I'd like to run a show on the penny stock market. So you see, on Mondays we have the Chasms Power Options show. On Tuesday, Beauty and I are doing a show on sort of popular big cap stocks, especially in the sort of beauty and fashion world, and then looking at the fundamental valuations and trying to understand whether these stocks are of any fundamental value. Wednesdays we're doing the Fibber cryptocurrency show, so everything cryptocurrency and Bitcoin related. Fridays I still have this open. I'd just like to do a free-for-all Fridays. Thursdays are out of the question because that's my son's day. He gets 100% of my attention that day. And then Sunday afternoons, we'll do this for another hour, but basically Liam's got my attention for the rest of the afternoon. And then, as I don't know whether any of you were in yesterday, but Saturdays I'd really like to do a sort of trading psychology and risk management, professional trading, that kind of thing. And a TradingView member, LowPro, and I are working on this trading plan show. And actually, I think it was received fairly well. I got a whole bunch of really positive feedback yesterday, so I think we're heading in a good direction with regard to all this. So that's basically a nice little summary of what I do and what the website offers. There's just a world of information here, and like 90% of it's free. And if you want to take the next step and subscribe, you're more than welcome. I mean, you can do a free 10-day trial if you're interested, as well as all that other stuff. I do quarterly newsletters as well as special reports. And those get sent out to subscribers as well. All right, so that's sort of a nice summary of the site, and I think it's probably a good idea that I just do that. Now, let's see who we have here. We have Chris, we have Robert, and we have Tim. The question at this point is, basically we have an hour or so left, and by all means I'm not going to leave you hanging. But do you have any specific questions, and can I address them and try and help you to understand? So I will go on mute, and I will wait for a question to be asked. All right, so I'm not quite sure whether you guys can hear me or not. Oh, good. Okay, so somebody is responding. So Tim says, I'm completely new to TradingView and trading in general. So as much to take in, I understand. Do you have any tips on where to begin? Well, Tim, I mean, I know it's going to sound a little bit redundant, but I do. The simplest thing that I would suggest is just head on over to the seminars page and just pull up this introduction to capital markets. And this is 70 some odd pages long, so you're not going to blow through it in 5 minutes. But I would suggest you do some reading. There are a number of different sites that I like to use. If you go into my links list, so after you've read the Introduction to Capital Markets, which will give you an idea of how these silly markets work and the whole concept of building a trading plan, I would recommend you take a look at this area here. It says editorial and instructional. And this gentleman here, Mr. Huddleston, he is a fund manager, very, very smart trader. He has produced this Scout Sniper Field Guide. And I believe that that's an excellent start for people who want to learn how to trade like fund managers, not just messing around in the market. Kaboom. So that's an excellent source for information. This Scout Sniper Field Guide series is 8 videos long, and as you see, you know, this video in particular is about 40 minutes. Some of his videos are over an hour. So lots and lots and lots of information for you to digest there. I happen to work with this company, and this is the prop firm that I work with. It's called Top Step Trader. Basically, if you know how to trade, they will fund you and give you more money than you know what to do with. But the long and short of it here is they do have a nice YouTube channel. So basically, this is a very, very popular source for trading information. It's a little bit salesy, I will admit that, but some of them are, some of the tutorials here are very, very good. So that's a source for you to take a look at. I was just looking at this gentleman's site. I'm kind of impressed with him, trying to understand Gann angles and William Gann. So that's not a bad guy to pop into. I like this guy here, Rob Hoffman. He's a pretty good trader. So those are a bunch of videos you can look at. And you know, the list goes on and on. You know, if you just spent you know, the next couple months just sifting through Inner Circle and even the TST site, that'll keep you busy. And I guarantee you that if you took notes and really studied in earnest, by the end of these series, the Scout Sniper Field Guide, you'll be one heck of a good trader, no doubt about it. So that would be my my suggestion as to where to get started. I hope that answers your question. What do you think? Let's see, Tim, does that answer your question? Good. Thank you for the tips. Exactly what I needed. Excellent. That's what I like to hear. All right, Robert Wells asked, where on the website was the page with the email sign up for the PE ratio stocks that you were showing? All right. Good question, Robert. The algo itself is still, for me, in beta. You know, I'm not quite at the point where I want to market this thing. So as a result, I'm not charging a fee for it. But you know, if you go to the website, you know, we'll start on the home page just to keep it nice and simple. All right, so here's the home page. Up at the top, the first selection is subscriptions, then it's CRI's algos, so click on CRI's algos. And also, too, if you happen to be looking at the site, you know, and scrolling down through the page, you can find all these menu selections here. So you click on CRI's algos. Holy crap, this server is slow. Once you get onto this page, you'll notice that just below the CRI's Delacorp index, there's a link here, WDB Options Model Screen. So if you mouse over that and click on that button, that takes you to this page. And it's a totally separate entity. I haven't really incorporated it into the site yet because, like I said, it's still very much beta. But having said that, it works. There's no doubt about it. It works. And, you know, just even as we see here, you know, these numbers themselves are quite compelling. Whether the stock takes off today or tomorrow, that's another question. You know, I suppose you could argue that as a rational analyst, what is rational analysis? Well, rational analysis was basically John Bollinger. I don't know whether you've heard of Bollinger Bands, but John Bollinger's quite well-known market technician. He coined the term back in the 80s where basically you're combining fundamental and technical analysis, basically the intersection of the two. And, you know, as somebody who's worked in the markets for a better part of 20 years, what I found, and, you know, this is my moniker, this is why the relevance of it, if we consider this green area that I'm mousing over as the technicians, and then this red area as the fundamentalists, what we found historically is that the two camps really didn't like each other, sort of like oil and water. And it was really all about sort of hubris, where the technicians thought the fundamentalists, you know, didn't really know what they were doing, and the fundamentalists thought the technicians didn't really know what they were doing. And the best analogy that I think I've ever heard for understanding the stock market and fundamental and technical analysis is think of two people in a car driving down the road. And the technician is driving the car, and the fundamentalist is sitting in the passenger seat, and he's the navigator. And the fundamentalist is looking off on the horizon and looking at the blue skies and seeing the destination way off on the horizon, whereas the technician is looking at the road and actually swerving and steering the car to avoid the potholes. So if you think about it from that perspective, you know, the fundamentalist sees the picture down the road, but the technician is really concerned about the short term and watching out for the traps. What happens in that magical place where the technician and the fundamentalist, they actually overlap? And so this area, this white area from these two circles overlapping, is what's called rational analysis. Basically, like I said, the intersection of the technical analysis and fundamental analysis. And so that's sort of where I come at this equation. I don't really have an opinion who's better or who's worse. But what I found is when they both agree, you get some extraordinary opportunities. And you know, this Gafesia is, I think, an excellent example, where you know, as I pointed out, the fundamentalists got really excited back last summer. Like we said, just ridiculous fundamental valuations that would have come up on our fundamental screens, right? And the fundamental valuations were so compelling that, and this is, keep in mind, that institutions write like 90 to 95% of all put options, right? Retail investors don't write put options. And there's a number of reasons why, including the fact that the Chicago Board Options Exchange actually puts additional margin requirements for retail investors to write these put options. So you actually have to put up a little bit more money ahead of time if you are thinking about having the open short position on. And that's understandable, whereas institutions don't have those requirements. So as a result, we get these funny situations where the market drives to just stunning fundamental valuations, and as a result, the put premiums actually come up to a point where if you actually do the trade, write the put option, if you can just factor in the margin requirement if you were exercised on the actual option, you see that you actually get paid to do the trade. And like I said, retail investors don't write put options. So it doesn't surprise me that the institutions, they'll do these trades all day long because they get paid to do them. Whereas Joe Sixpack investor can't or really won't do it. It's not necessarily that they can't. It's that they won't because of a whole bunch of perceived barriers. And if you want to learn about all that kind of stuff, you can click on these links that sort of go into detail about the model and how it works. So does that answer your question? Perfectly. Yay, I like to hear that. All right, so Chris Michael says, love that guy. Sure hope you're talking about me. Tim says, thank you, perfect. Okay, so we've heard from Tim, we've heard from Robert. Chris, do you have any questions? All right, I don't know whether Chris is here or not. So I will just briefly go on mute. If you guys can think of something you'd like for me to chat about or examine, we can look at stocks, we can look at bitcoins, we can look at fundamentals, we can look at what color the sky is. I don't really care. That's what I'm here for to do for the next basically 45 minutes. All right, so what I will do then is at this point I'll just put another message out on the TradingView to see if anybody else would like questions answered, and if we don't get any other inquiries, then we might just close this TUT session up earlier, which is perfectly fine. Keep in mind this is just a service to try and help you guys. Well, now I see some comments coming in. All right, let's see what we got here. All right, so Chris says, you want commentate on the BTC price action currently, bear trap or fake out? I hope you don't mind that I steer this intro to crypto realms. What is your opinion on the current situation with the most recent bearish trend and when there is possible turning point? Also with regard to FID retracements, where do you see them being for BTCE? Okay, let's get BTCEing. I think the most relevant, and here, let's put away some of this other stuff. Okay. If we look back, and we're going to have to scroll back a bit now. Actually, you know what? This is probably a really good chart to look at. Okay, so this is a 60-minute BTCE, and I like using this one because it seems to be relatively common amongst the community. There are a number of different people that use different exchanges. Basically, my feeling here is that there are a few, that ironically enough, this whole concept of having a number of different exchanges and having a number of different price quotes is in itself a little bit concerning. My background with BTCE, or Bitcoins I should say, I actually came at this because a cousin of mine asked me to look into this. I was having a Christmas dinner with the family at Christmas, and I was talking with him, and he asked me if I knew anything about Bitcoins, and of course I really didn't know anything. So I wouldn't consider myself a veteran of these cryptocurrencies. I'm still sort of in the learning process, and what I've noticed is that the behavior of these cryptocurrencies is actually kind of cliche. And you know, what I saw through the latter part of March, in my opinion, was, you know, through this consolidation, we had a nice double bottom form here and then another nice little double bottom. At this point, I asked myself, what are the actual events going on in the marketplace? And it turns out that right here, the talk was that there was a big San Francisco Bitcoin convention coming up. And what I've noticed as a stock trader for years and years and years is that the market will look at these events as potential buying or new buying coming in, let's say. Somebody's just sent me a message. Let's see what we got here. Used to do film for Lemming, can send the link for the hangout. All right, well, let's pop this guy in here. Somebody else wants to join us, so bear with me here. All right. So what I saw was, and let's maybe just pull up a new chart so that we can mess around with it. BTC USD, and we'll do BTCE, and we'll do 4 hour, and we'll throw on studies. All right, so into this San Francisco event, the smart money will literally bid the whatever it is up, because what they're hoping for is through the San Francisco convention, which was right here. You know, they'd love to obviously get some crazy news that some big whale has decided he's going to buy $1 billion of this, and sometimes that can be announced through these events. But also, too, you know, the small retail investor. They're not going to leave this thing on the floor into that event. If the smart money knows that there's potentially new buyers coming in, then they will bid the stock or whatever it is up into that event. And what I find really interesting here is that if we just did a nice simple fib from this high here, that's 607, down to these lows, we came up and basically kissed the OTE short sweet spot right on the nose. I've got a sneeze here, so I'm just going to put you on mute for a second. So one should not have been really overly surprised to see, you know, this is what they call buy on the rumor and then sell on the news. At these levels, at this 550 level, it was looking relatively cheap, and you did have a nice little long setup right in this window here. That trade basically played itself out. And I think I can hear somebody's dog in the background. Now I can say, oh, hello. This is Hav. Hello, Hav.
Hey.
All right, if you could maybe just put yourself on mute while I finish this up, and then when I open up the floor to questions, you're more than welcome to chime in. Okay? Cool. Thank you. You know, just to finish this thought, there was a long setup here. The long setup, unfortunately, played itself out, and it was a trap. One could argue that when we lost this channel here, there was going to be trouble. I had postulated that this entire formation was a bat formation, And if you look up harmonics, bats usually resolve up to the 88.6 or the 1.13, but those are fairly aggressive targets. Long and short of it here is if you had bought in here, you should have at least been thinking about locking in some profits on the OTE short sweet spot tag, if not actually going outright bearish. The capitulation, of course, and what's fascinating is this is what's known as a fractal pattern right here. So a fail of this level basically means the resumption of the downtrend. And what I find really fascinating about this is that they did not announce this China news. Hold on, somebody's calling me. How do I do this? Oh, okay, we got rid of it. They didn't announce this China news through this convention. They actually waited for it to finish before they pulled the rug out from retail investors. So this, in my opinion, was a setup. And it sucks because, you see it so often in the market. So now let's fast forward to today. This is a 4-hour chart of the Bitcoin, BTCE. And so are there any things that jump out at us right at the moment? The first thing that jumps out to me, of course, is as a OTE guy watching Mr. Huddleston's videos, this area here should have represented support. And he calls it the optimal trade entry, of which this 509, and these are just ballpark figures, is what he calls the sweet spot. So not a big surprise that we've had significant battle in here, right? Having said that, is this in itself justification for doing a trade? And in my opinion, no, it isn't. You need confirmation. So ideally, as a trader, we pull up these charts, we look at the OTEs, we say, all right, well, this is an area where we may be interested in. So does volume and momentum confirm the notion of a bottom here? And when we look at the on-balance volume, and this is my favorite indicator for judging money flow, we see, whoops, let's try that again. We see that there is no bottom. Hasn't come in yet, and we've just broken to new lows. So can't really justify looking for longs there. If we look at momentum, we'll first start with my MACD study. This is just a pure raw reading of momentum, and what the MACD is basically a comparison of two moving averages, and looking at the separation and the tightening. What's another word for tightening? Confluence, maybe? I don't know. It's probably not the best word. Of the two moving averages. And ideally, as I mentioned in that technical analysis course that I did, what we're really looking for here is the concept of divergence, where basically, let's see if I can find it here quickly for you. Where are you, technical analysis? There we are. So divergence is our real key here. And you can read a little bit about the concept of convergence and divergence here in the course. As well in the footnotes, there's several examples. But basically, for us to get bullish, we want to see higher lows and higher highs. So the market actually set up a real pivot here. All right, so you can see momentum-wise, we had higher lows and higher highs, and you notice that Willie kind of got a little stupid here. So, the way I would look at this is there was a momentum and volume setup here, and you can see that the volume turned right here. We had a moving average crossover. And in essence, this was this San Francisco event. So they did put in a bottom. This was a perfectly realistic trade. And then, as we said, upside expectations off of the trade should have been tempered. Actually, it's probably off of that high when we came up and kissed this OTE level here. Remember we saw that on the 1 hour chart right here. Boom, boom, boom. So I would argue that this setup played itself out, and looking at it at the moment, we had a potential higher time frame window where we could have seen a bottom come in. We had no confirmation whatsoever by any of our volume or momentum indicators, and indeed the fail through here is very poor. And this is basically turned into sort of like what they call a waterfall sell setup, and we're not even yet back into stupid condition on Willie. Willie gets basically stupid oversold on a reading below -80. So actually we're just now, here's the indicator value right here, we're just now at -80.37. So we can now start to look for bottoming action again based on Willie. The problem here is we don't really have a lot of levels to work with. And considering that, there's a simple rule in the market that says that if bull markets are actually bullish, they will hold this 78.6 fib. So you can see how we initially came down through it. We put actually tails through that level. Couldn't close below there. Then we came back down and tested it again and again and again, and now finally we're losing that level, and we're actually starting to close 4-hour candles below that level. So I'll put it all together, and unfortunately this just doesn't paint a very pretty picture. As a technician, I have to say that a target has got to be a test of that low there. What is that low? 430.12. So let's just adjust this. 430.12. And we can leave the other one as it is. So on a 4-hour basis, do I have any reason to get bullish? Nope. And to add insult to injury, like I said, we just came off of that San Francisco setup, and that's this area right here. Couldn't find any traction out of that. I suppose you could argue that you're starting to get measured moves. I heard people talking about bearish pennants. I don't necessarily agree with that, but what I would say is, this is a nice simple bear ABCD harmonic pattern. So if we take this range here as our first leg, the bear ABCD just goes something like this: boom, 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 boom. Right? It's just a nice simple harmonic pattern. So in essence, right now, this is targeting down in the low 400 area as an ultimate target. I do like the fact that we are now finally putting in lower highs and lower lows but the MACD is not putting in lower lows. So wherever this ultimately finishes, and my hunch is we're probably heading down into here somewhere, my gut feeling is they're going after this low. There'll be some sort of capitulation low into that event. Willie will get nice and stupid. And remember, like we say, when Willie gets stupid, the price often goes parabolic. To see a parabolic move into that event really wouldn't be a big surprise to me. And we're starting to lay the groundwork for the next bull attempt. That's probably going to be a ways away. My hunch is we're probably going to do something like this, and then turn up, and then something like this, and then we go back up into here. So just on a very, simple hypothesis, I'm probably not looking for a tradable bottom until this is the beginning of April 4th, 5th, and so April 4th and 5th. So if we look at our calendar, what is that? That's basically a week away. Keep in mind too that we have quarter end coming up here, so Monday, Tuesday is going to be a little bit screwy. And then what we have are at the beginning of every quarter, I produce a report. If we look back on my website, it's called the first 2 weeks, and basically the first 2 weeks of every quarter, mutual fund managers get basically big inflows, and so in essence, let's go through the whole thing here. Last report I did, of course, was the basically the end of January, beginning of February, because that was the beginning of the quarter. First 2 weeks, so every quarter I produce one of these reports. Again, earlier on I made reference to the idea that if you subscribe, you get access to reports. This is a typical report that I would put out, where we literally watch the fund managers, what they do over the first 10 trading days of the quarter. And where they put their money to work is often an indication of both where they figure we are on the broader economic cycle, and it's also a very good sort of tool to use as traders to get an idea of where the markets are going to move for the quarter. The point I'm making here is that we have the quarter Q2 coming up here. So for the first basically 2 weeks, right through to the end of not this coming week, but next week, I'm going to be watching the fund managers to see where they're actually going to be putting money. So we can't really make any grand conclusions about the market until that's out of the way. So that's my 2 cents on Bitcoin. Unfortunately, it's just not a very pretty picture for the bulls right at the moment. Okay, so does that answer your question, Robert? Good. It is now 11:37, so we got about 20 minutes to go. If you had a specific question, I'm more than happy to answer it. If any of the other participants have a question, I'd be more than happy to answer that as well.
Hey, I'm a latecomer, just got here, but thanks for, I guess I got here at the end, but that was good to see a little bit of it.
Well, that's okay. I mean, the first part of these toots is I just basically review who I am and what my website has to offer. I did get a bit of interest there because I don't think people realize how much free information is on that website. So I think that served a purpose. And really the purpose of these tutorials is to help you guys, just to answer questions that you might have. I think what I'll do, Robert, if you don't mind, is I'm going to publish this 4-hour Bitcoin chart with the notes that I have on here. Basically, um, writing up a little bit about the tutorial session. And if you wouldn't mind just maybe posting a comment on the chart to the effect of whether what I talked about helped you, and that way we have a little bit of a track record. You cool with that, Robert? Okay, cool. And as well, I don't know whether you guys are have done it. A lot of people that have taken my little tutorials, um, I add them to my little Google Circle list so that when I do these little tutorial sessions, everybody gets a notice. So if you haven't given me your email, then by all means fire it into the little text box and I'll add you to the circle. And any future tutorials or shows, you'll get a notice that they're on, and you're more than welcome to attend. The only request I have is if somebody is asking me a specific question, if you could just maybe mute yourself and lurk in the background until they're done. And then that way, we can sort of focus the answers. So, did you have a question?
Yeah, I was kind of wondering just one thing. You mentioned like a little bit of a connection between how that China thing didn't come out till after the conference. Did you feel there's some kind of actual connection there, or was that just pure coincidence?
I think that I suppose there's two ways to look at it. See, the problem with China, right? And I've been trading China now for 20 years. The problem with China, and please nobody take offense to this, but this is just a brutal fact of life. Unless you are in someone's direct family in China, people don't give a rat's ass about you. And that's just a brutal reality of life there. So things like market manipulation are very commonplace with the Chinese. If you look at the transition of Hong Kong from the British to the Chinese, it was so incredibly telegraphed how they were running the market up into that event, and then literally within a week of that event being over, the Chinese pulled the carpet out from the entire market and the whole market collapsed. Into that event, people were calling it the Seven Tigers of Asia. And anybody who was around trading in the 90s will remember that. And everybody was buying emerging markets. It was just stupid, right? Into that event, valuations just got so ridiculous. And then literally, like I said, a week after that event, the Chinese pulled all funding and the whole market collapsed. And then they called it the Asian contagion, as one by one each of these seven tigers of Asia was taken apart. I would argue that the whole thing was based on the fact that the Chinese just walked away from the market. If you look at the 2008 Olympics, exact same scenario. The market was driven up into those events. Again, to what most people would consider pretty, number one, unsustainable levels. Like copper, for example, is such a good example. I remember trading years and years and years copper between about 40, 50 cents a pound and $1.20. And that was literally the trading range. Then all of a sudden the Chinese come out and say they were building up their economy into the 2008 Olympics, and all hell broke loose and copper went to like $3, $4 a pound, which economically is just unsustainable. That's just unsustainable. It's just as simple as that. And the subsequent, and what's fascinating is if you look at the Chinese, within a month of the 2008 Olympics, the government literally pulled the plug on everything, and the whole market just collapsed. Here in North America, we call it the housing crisis. Well, I would argue that the foundations for the housing crisis were built on the Chinese artificially propping up the market. So that brings us to sort of modern, current day with this Bitcoin. I would argue, simply put, that if the Chinese can find a way to make serious money off of, unfortunately, very uneducated investors, they will. And here, I don't know whether it's a trait of the Caucasian. I don't know. That's getting into dangerous territory when you start, making racial comparisons and all that kind of stuff. But the long and short of it here is, in North America, we seem to have a bit of a conscience that when stock markets collapse, we get all concerned. We're really upset. We understand the broader implications. The Chinese, they just don't give a rat's ass. And if you lose money, well, that's your own damn fault. Unless you're in somebody's direct family, they just don't care. So having said that, what I see is, and keep in mind that these Chinese, I mean, one guy that was long this thing recently, he said, isn't this like the third or fourth time that the Chinese government have banned Bitcoins? So, anytime you get these kind of uh, uh, what's the word I'm looking for? Not necessarily government endorsed, but basically these wide swaths of policy. You have to ask yourself, number one, was this potentially a trap? And considering that the BTCE, for example, ran from $420 back up to 600. I mean, basically a 50% gain. The market was a bit frothy at that point, and in my opinion, maybe a little vulnerable. If we look at the daily chart and the weekly chart, I've had a lot of people tell me that Brian, really, I can't justify even looking at BTCE or any of these Bitcoins until the top itself is actually broken. So, there's a lot of people that would argue that really, I mean, in simplest terms, I suppose you can draw a trend line off it here, but until this trend line is actually violated, we're in a bear market, right? So if you look at it from that perspective, I find it incredibly coincidental that the Chinese, where did they? They came out and basically did their Bitcoin ban right here. So basically the market had a panic sell-off. I don't know whether I can believe this 100 print or not. Actually, the low on that print, yeah, 102. That's another thing with these unregulated markets is, can you actually trust these charts? But what I would say is this seems to be awfully fortuitous timing right up against the downtrend for the Chinese to come out and make this announcement. I guess the way I look at this is, they took quite a bit of effort to get this Litecoin listed on these Chinese markets, ran the price up into it, and now they're just trying to flush everybody out. And the irony of it all is that you could easily, I think the deadline for them to be out of the market right now is something like April 14th or April 15th. You could very easily see somewhere between them the Chinese government come out and say, oh, actually, you know what, we're going to allow a little bit of trading in this. And then the whole damn market reverses, and all of this was just fluff. So I don't know whether that answers your question, but my general feeling is, number one, don't trust news out of China. And I know people really don't like me saying that, but as a guy who's been playing this for 20 years, I've learned the hard way not to trust them. Don't trust them. It's that simple. Number two, when you're in the middle of this, yeah, these markets can really move violently in the short term based on these, these blanket statements. To me, the Chinese government coming out and just blanketly saying we're going to make it totally illegal for someone to own Bitcoins, that seems a little suspicious. Something just doesn't smell right about that to me. So, does that answer your inquiry, Have?
Yeah, I don't know if it answers. It's a great to hear the thoughts on. I don't think anybody can really answer the question because it's such a mystery. That's just such an amazing thing to me how it's gone like weeks, and there's absolutely no intelligence on what's going on because nobody speaks Chinese in the forums, nobody can really interpret what the hell's going on. I thought it was really interesting the way Bobby Lee was just in his first response to the Wall Street Journal thing was, well, it's probably happening. They wouldn't tell us. And he probably knew that all the way through the conference. It's not like that was sudden news to him.
Yeah, that sucks, eh? You don't like to. I mean,
kind of bizarre.
and so what that tells me is that there are a lot of moving parts here, and the fact that it's not regulated to me says that this is very this is more risky in my opinion than buying a bulletin board stock. Most people just don't realize that.
Yeah, the one trade-off is though that if you do really see the potential in Bitcoin and you believe in that, then there is an immense payoff down the road. That's just not even comparable to these other things,
Well, but like I've asked this question time and time again, and nobody can give me an answer. What is the fundamental value of one of these coins? Like if I was holding a Bitcoin in my hand, what is the actual fundamental value of this thing? Is it $100?
Well, I would answer that it's not in the coin; it's in the slot in the ledger, and the coin is just a start. It's the transfer of value, but it's a slot in the ledger, which in the future all kinds of things can be built into in terms of contracts and so forth and so on. That's the one thing, and the other thing is basically the whole blockchain and the peer-to-peer system is a way of eliminating middlemen in just about any industry you can point to, everything from escrow to contracts to everything else. And so
that's
it's a bit of a long.
I mean, that's totally awesome. That's fine.
Yeah, that's where I think the potential.
What's the actual value of one of these things? Is it 5 cents a coin? Is it 10 cents a coin? Is it $100 a coin? Is it $50 a coin? Do you understand what I'm saying? And if you have that sort of question, basically, I mean, when I look at this long-term chart that I have on my screen, as a technician, and I hate to say it, it makes me sick to my stomach, but that's the long-term trend line.
Well, now I think you have to differentiate between the speculative aspects of it and the actual ecosystem. I totally agree with you. Right now, the long trend line is going down, down, down. No question about it. But I think the people who are really developing the technology and moving forward really don't care about it. A lot of them, got in early or whatever else, and a lot of them have total faith that it's going to be worth, much more than it is today. So that I think there's really two very separate things here, and all the people running around yelling doom and gloom about this crash, are basically involved in the speculative aspect of it, whereas the people who are starting startups and all kinds of different small industries around it, that's not their primary concern is the actual speculative value in the next 12 months. They really see where this thing could be in 4 or 5 years.
Right, and I guess like I trade crude oil on a daily basis for a prop firm. So for a trader to actually justify ownership of something, like when I do these, I did the PBR and the GAFSIA and all that. And like when I'm trading crude, and I see supply and demand, and I see crack spreads and all those kind of ideas, I can come up with a general fundamental value for any product. And my question from day one, I've asked the community and nobody can seem to answer it, is, what difference does it make to a website operator if they are taking Bitcoins as payment? What difference does it make to them whether Bitcoin is trading here, here, or here? And really, if I understand correctly, it makes no difference to them.
No, it doesn't.
So
not
the key
BitPay or something like that.
Right. So the key is, as a trader speculating, that's a huge risk for me to take. And I also in my commentaries, I basically point out that, for a company like Walmart or Disney or Boeing's probably not an example, Procter and Gamble, whatever, for them to actually do business in Bitcoins as a justifiable currency, this is just way too volatile. Ironically enough, what they want to see is the flatlining, you know? Maybe trade in a trading range. So if we, look at a major currency unit, like, I'll just pull up the Canadian dollar, for example. You see that the trading range that it's in is relatively calm, right? I mean, this is 99, and this is 89. So basically, that's a 10% band, right? And that's that's doable for currencies and commodities and all that kind of fun stuff. If we go back to the Bitcoin, this trading environment, I can't see how a major corporation can say, "Yep, I'm going to value all my products in Bitcoins."
Well,
And
but the thing is that that's not what's going to happen in the short term. Like, I run a business. I'm starting to accept Bitcoin for my business, and the point is, I'm still going to have my prices on the wall in the local currency, and people can pay those prices at the same rate, same local currency, and as soon as they're funneled through pay, I cash out basically. And
right,
as an idealist, I don't really like that. I prefer the whole thing was Bitcoin start to finish. But I recognize in the short term that because of this volatility, because of the speculation, that's going to be the solution for the time to come. And I totally get what you're saying about it's very difficult to pin a value on it. And at the same time, I mean, for example, take myself. The whole reason that I have, a few of my coins out of cold storage and I'm back in the market is I see the chance that I can, double the number of coins I have during this bear market. Okay. And that's not a question of making $200. It's a question of 5 years from now, a $40,000 or $50,000 difference on a single trade from today. If you see what I'm saying.
oh,
If you
I hear exactly what you're saying,
So
and
that's where the justification is for trading in this volatile framework right now.
right. So my argument is basically you won't get broader adoption until. I mean, the irony of it all is that I mean, I don't know. Do you trade in U.S. dollars? Is that what you're talking about?
Yeah, I do because the exchange I
Right.
use an exchange that
So
does that.
and I joke with Bitcoiners. I say, if I was running a website and I priced my product in Bitcoins, I could literally put myself out of business in a heartbeat. I could either way undervalue my product or way overvalue it. And the irony of it all is it has absolutely nothing to do with my input. It has to do with the crazy volatility of this market.
Sure, but nobody's doing that.
Well, so my argument is you're not really trading in Bitcoins. You're still trading in U.S. dollars.
But the point is, we're making it much easier for somebody to pay. For example, I run a guest house, and so if I'm going to take a deposit on a booking from a different country, right now it's costing me out the nose $30 or $40 simply to get a deposit. It takes 4 or 5 days to do it. With Bitcoin, that deposit's there in 30 or 40 seconds, and it's
Ah,
irreversible.
and
So it's
that's interesting.
you
And
know, and
the interesting thing part about that is that at some point governments are going to be like, "Holy shit. Do you see what's going on here?" Cuz that $30 $40 you talked about, right? That's literally, that's what is that? That's, levies and currency transaction fees and the middleman, right?
banks,
Banks, right? So
right?
do you think, I mean, and let's just ask this, do you think that the powers that be who really run this world are going to let that happen? Are they
Well,
going to literally let their lunch be eaten?
I think it's a very appropriate question. I think basically that the powers that be move way too slow to see that fully right now. The ones that
Right.
do, the ones that do see it as a double-edged sword. Either you grip the sword or you get burned by the sword. And so I think that the free market economies will grip this sword and move a quantum step ahead of the economies that don't do it. That's my personal point of view. As far as the banks go, they're in the position of blockbuster right now. If they don't get it on and kind of wake up, they're going to have an enormous part of their portfolio stolen away by this sort of and it doesn't have to be Bitcoin, but the point is that Bitcoin has shown that you don't need the middleman to do enormous different transactions, be it today it's currency, today it's money. But tomorrow it is going to be escrow contracts, it is going to be car rentals, it's going to be all kinds of different things that are simply exchanges of a concrete agreement and value that's irreversible because of the
Yeah.
blockchain. So the industries that are all based on middlemen, everything from mortgage to all the ones that have gatekeepers, any industry that has a gatekeeper will go the same way as the music business. I see this as just being an utterly natural evolution in terms of the internet protocol to another level protocol of exchanging value.
Fair enough. So I love those debates about sort of the long-term picture. Sadly for Joe Sixpack, like I thought it was interesting. People were getting Bitcoins in their stockings.
Right.
The market right now is getting rid of those people, right?
Yeah.
And once they're gone, which sadly might be back at around $100, who knows, and the public is washed out of the system, that's probably when you have your next bull market start.
Yeah, totally agree with you. But the guys who are, really these investment groups and so forth, it's just, it's a drop in the bucket for them. This 200 variation in the price now this month. They see the future, and they see there's only 21 million bitcoins, and the people that end up controlling that many slots in the ledger in the future, the guys in the conference. There's one of the talks in the conference. That guy who was the Sri Lankan guy who was one of the original investors in Facebook, he basically said, he hinted that on the horizon Facebook's going to have a Bitcoin wallet. That's going to be a very, it's going to be a leap forward in what their users can do as far as being able to use Bitcoin in an easy way, which is a missing piece of the puzzle for consumers right now.
Yeah.
So there's stuff going on behind the curtains. And these guys who are really making these things happen now, the venture capitalists and so forth, they don't give a rat's ass if Bitcoin's $200 a day or $300 a day. It makes no difference at all. The key number is 21 million.
Yeah, that makes sense. So I was just gonna. I wanted to make a point.
I don't mean to hijack the direction of your show here.
Oh no, it's not. This is exactly what the tutorials are for. And really, you're not hijacking. The point here is, if people have questions and we have lively debate, that's the purpose of these tutorials. Absolutely.
Well, that brings me to another question: is that at the bottom end of all these capitulation scenarios, I'm not sure it acts like a normal market. And so if you have the D leg of a capitulation scenario going all the way down, at the bottom you have people waiting who are fairly well, versed in this sort of thing, and are sitting fairly calmly waiting to snatch up a lot of the value that everybody's dropping.
Yeah.
So that's why I think it's very difficult to see exactly where the bottom is. In a normal market, you might be able to follow that Elliott wave sort of system or whatever it is you subscribe to and say, okay, well, it's going to logically end here. But in this market, I think there's just something fairly different about it, that there's a large percentage of people who don't give a shit where the bottom is, because they know that that's a trivial question, really, as far as what the future is here.
Well, so ultimately, and that sort of comes back to sort of my feeling is, and we watched, Fibber and I were watching. I wouldn't be surprised if a Facebook type of player basically said, yeah, okay, we'll get involved, back at those old highs. That's 200 and change,
Yeah.
which might just happen to be right, in a panic, maybe we go down and tag that trend line.
Right.
Again, getting back to the, simple valuations, I guess the easiest way for us to know that the market has hit a floor is, you see that period through May through July through September of 2013, how we sort of flatlined, and we based, right? So speculators will probably start discerning that there's a floor in the market when we start seeing that kind of action. The fact that we're up and down like a whore's drawers right now, in itself says you that no, we're not at a bottom. It's
Yeah.
just still too volatile.
Yeah, and also it's this whole China thing. I mean, it's remarkable to me the people who it's the attitudes that people take towards the China thing seem to be a sort of a Rorschach of their own psychologies and have very little due to actually to this, with the China thing. I mean, the China thing has a certain effect to it in terms of how much of the market it's going to get pulled out, but in a way, it's like increasingly if you see what the ecosystem is going to be like in 10 years, the Chinese will get back into it one way or the other because they'll have to.
Yeah, well, the ultimate, and this is another thing that jumped out at me recently, um, was, you know, just so you understand my long-term perspective.
Yeah,
I'm a big fan of the fear and greed cycles, and each of
yeah,
these cycles is about 17 and a half years in duration,
right.
and it's basically the generational cycle. So we go through fear and greed cycles. They're very, very normal. And so this is a chart that I produced on the US dollar index. This is the dot-com boom. There's 2000, the top, and this was the top of the last greed cycle. And our next anticipated bottom of this cycle, the top of the fear cycle, should come about Q3 2017.
This is
Um,
the U.S. dollar against what?
Pardon me?
The U.S. dollar against what?
This is the US dollar index. It's a
Right.
basket of all of the world trading pairs.
Okay.
So basically, it is the market benchmark for what the US dollar is worth relative to all of its trading partners.
Right.
And if you look at the U.S. dollar historically, you see that it actually corresponds very nicely to these fear and greed cycles because it's basically, especially through the end of the Second World War and all through the Cold War, it was sort of the world's financial asset proxy. You could argue that that's unwinding, and one might argue that this, capitulation event into the end of the fear cycle would basically might actually spell the end of the U.S. dollar index being the world's financial asset proxy. That's tough to say. Me personally, I think that this is actually quite just business as usual, and the fact that we have these cryptocurrencies emerging through this fear cycle, at the moment, investors have a choice of whether they want to own paper assets or hard assets. And so right now, through this fear cycle, the general consensus is that the population wants to own hard assets and is moving away from paper assets. So the idea that you have these cryptocurrencies which have fixed numbers of units out, and in essence are a pseudo hard currency in themselves because the number of units cannot be manipulated theoretically, is sort of that proxy. What would be interesting, and what I've talked to people about is, at one point people were saying, well, one Bitcoin is worth 1 ounce of gold. And so, I had a hard time wrapping my head around that idea, but it doesn't surprise me that the Bitcoins and the commodities are getting a bid now. One thing I did want to point out, and I just have to make sure which link it is here. I think is it this one? Yeah. Just a few months ago, there were just a few of these cryptocurrencies. And now what's happened is there's tons of them turning up. And so the question doesn't, just get limited to what's Bitcoin's fate, but now it's how diluted does the market get in all of these silly cryptocurrencies. And by the end of this, there might be thousands of these cryptocurrencies floating out there. And really, all this does, in my opinion, is it just plays right into this very natural fear cycle progression. And my fear is, the key here is that through the dot-com boom and into that cycle top, people acted really stupid, and they bought growth with no earnings, with the general perception that growth was just going to continue endlessly. I would argue that at the end of this fear cycle, we're going to have people buying what perceived stores of value, believing that basically there's no end to this cycle. But I know that this cycle will turn. And I've made the argument that this cycle will probably happen the day that, the peak will be the day that, the Chinese or even the world currency system says that's it for the U.S. We're toast, we're leaving them, and no more being pegged to the U.S. dollar. And ironically enough, I've had a lot of very wise market participants suggest that if the Chinese people themselves are ever given the opportunity, there's so much capital locked up in China that you could have a 20-year outflow of capital from China that would actually be the basis for this U.S. dollar to start moving back up again. Now, that's a whole other conversation, but the point I guess I would just make here is, as a trader, I need to be able to see higher highs and higher lows. That's what defines a bull market. And until I see that, I have to assume that there is no bottom on this Bitcoin in particular. Nobody can say the book value of Bitcoins is this. This is the hard value for these trading units.
Well, let me ask you a question then, because as I look at the order books, for example, on Bitfinex and Bitstamp, one thing I'm noticing is as we get down towards 430, there's a real scarcity of asks for the next, $70, $80 above there. So there's starting to be a bit of a scarcity at work here that's going to make, a bottom fairly short if there's a springback effect. You see what I'm saying?
Yeah, and so now we're getting into technical ease,
Yeah.
right? Can you, first and foremost, right? Can you even trust those order book numbers, right?
Yeah.
Like I know people that, I know lots of people that have told me, don't you look at the Hobie book, don't believe any of this. This is all bullshit. It's all lies.
Right.
So, and really, like, my comments earlier about the Chinese, that basically plays right into that notion. Don't believe what the Chinese tell you, because half of it's bullshit. The second thing I would say is that we never move in just a simple straight line from A to B, right? I mean, we never just go, that's it, right? Typically, it's ebb and flow. So if you believe in ebb and flow, then that means you believe in things like harmonic patterns, right? And if you believe in harmonic patterns, then you know that at some point, the rubber band can only be stretched so far. So, just harmonically, I find it fascinating, your comment there about the 430 level. When I look at the harmonic pattern that's going on here, this is a very typical harmonic pattern where markets never move in a straight line. They move in, this sort of A to B to C to D, right? This is a very, very, very typical harmonic pattern, right? And this is a really, really basic one, right? I mean, you can get into bats and crabs and Gartleys and all that. There's a whole bunch of different harmonic patterns. This is a really, really simple one. This is just simply AB equals CD. It's a nice simple pattern. And what a coincidence, this harmonic pattern is lining up right with your sort of bottoming area where you figure that the selling is going to exhaust itself. So that would be my response to that, and that's trader ease talk. That's not fundamentalist talk.
Yeah, I look at that zone. There's one funny thing about that zone is the number 420 is in there. I've noticed there's a lot of bids right on 420.
Yeah, well, so, that shouldn't surprise us, right?
Well, it's to me. Those are human bids, not you know.
Well, okay, and so the great part about it is you should be able to take away from that like when you're looking at the Bitfinex, you like that one?
Yeah, yeah,
And that's another thing that bugs me is I really don't like the fact that we have, like on a weekly basis, we're jumping from one cryptocurrency to another to another. And it seems every week there's a different sort of currency du jour that people like.
yeah.
I started out, of course, with the Mount Gox, and then that thing blew itself up. Then people were like, "Oh no, you got to do the BTC stamp," and I was like, "Okay, fine, we'll start charting that one." And then I found out that not everybody can get listed on Stamp. You have to go through this approval process. And I started getting Bitcoin donations. And so I was like, well, where can I trade this thing? And somebody said, well, go to BTCE. And so I was like, okay, well, fine, I'll start charting the BTCE. I would argue that, that in itself is a bad sign. That's not a good sign.
And that's only going to last another 3 or 4 months. As
That's
soon as
right.
and so it's a growing pain sort of thing that within. I totally agree with you. I think it's just been chaos, but that's also the characteristic of an incubated industry, any kind of incubated industry, where things are just
Exactly.
growing.
It's still in its infancy, no doubt about it.
Definitely.
So I've made the argument, like guy coming from the stock market. I heard lots and lots of talk about maybe ETFs being floated,
Right.
which are exchange traded funds. The biggest trading vehicle in the world is the S&P Spiders, right, which is an ETF. You will not get those guys to participate in this game until there is some sort of regulated U.S. exchange that they can trust. There's no way they're going to throw hundreds of billions of dollars at this thing until there's some sort of reliable trading platform that they can use. I mean, I was shocked when I learned that there isn't even a Bitcoin exchange here in North America. They're working really hard to get one going, but this BTCE, do you know where it is?
You're in the shakiest and shadiest of all of them there, buddy.
It's in like Slovenia or some crazy ass Eastern European country,
Yeah, anonymous owners, everything.
Yeah, so I mean the irony of all of this is that, again, getting back to sort of this bulletin board sort of mentality, I mean this is as risky gets,
Yeah, definitely. But I wanted to go back to just one thing you were mentioning earlier in terms of the base value of the system and where the legitimacy comes from. I see this whole thing having not much longer, but it really started in terms of people being able to do file sharing. That's where people really started getting the idea they could that there was a network and actually a bit of a society out there of anonymous people that were okay to do business with. And so file sharing has become a very entrenched aspect in many people's, daily computer experiences. And
no, but
Bitcoin,
do you see the writing on the wall about that?
what do you mean?
Well, I don't know whether you've seen over the past 20 years, but something called the goods and services tax has become all the rage in the world.
The value-added tax.
Yeah, I mean, in Canada we call it the GST, goods and services.
Right.
Basically, every single transaction in our society, the government wants a chunk of it.
Yeah, and it's got its rationale because it's a less regressive tax than many other taxes. It's a tax on consumption, basically.
So the question here is, right, this Bitcoin thing has come about where that GST or value-added tax is negated. So the question I have to ask is, do you think governments are going to allow this to continue?
Yeah, I'm not sure it's going to be negated because for any kind of legitimate business, they're going to have to run their accounting, and that's where the government will nail it. You know what I
And
mean?
yeah, and well,
So,
that's kind of like this recent ruling on the IRS.
right, and I think that and everybody's bitching about that ruling, but it's people don't understand. The United States government is now giving the stamp of approval to Bitcoin, and that is just a huge thing, and people don't get that. It amazes me the amount of moaning and groaning going on in all these different forums about how it's all ruined now. When 6 months ago, if the main question was, well, will it be legal or not? But now it's not only legal, it's recognized, it's becoming entrenched in the legal system, and that's just
So how does a guy like me that maybe charges, I don't know, you know, $5 to do a service and I get paid in Bitcoins, how do I handle that taxation issue?
Well, for the next 12 months, it's going to be kind of clunky because you got to do it by hand with, value in, value out as capital gains from start of the year to the end of the year. It's simplest if you just don't spend any of that money and just hold it. But
Right.
within 3 or 4 months, you're going to have apps that do it automatically for you, where it's going to be automatic. I mean, that's going to be one of these huge industries that comes up very quickly, and it's going to be integrated. So the people that think it's going to be difficult, I mean, I think the IRS made basically, they're going to eventually, that was just a hearing law. It's not the final law. And I think the industry is going to say, okay, you have to exempt transactions under $1,000. There's going to be some compromise that makes it a lot easier. But
Yeah.
no matter what, it's going to be automatized. The wallets you see today that are Bitcoin wallets, it's going to be built into the wallet function, and the wallet keeps track of when the coin comes in, when it goes out. So it's going to be within the wallet itself in a particular tax jurisdiction. Because there's different laws in different places. In Denmark, it's going to be tax-free as of today. And I think you're going to definitely see a very interesting situation develop in the next year or two where different, regions and countries are going to start recognizing they can have a financial edge by making it an easier place to transact in cryptocurrencies. Already, London is already having a debate about that, the financial centers in London.
Yeah.
Um,
Interesting.
so it's going to be a very interesting situation for that.
So that, and that's part of this whole sort of growing pain process, eh?
Definitely.
Yeah. So, here's the rub, right? Um, we can make a fundamental case for these trading units to become a part of our society, right? Oh, did we just lose you, Have? Oh,
Huh?
uh, we can make a fundamental case for these things being part of our society. The problem is that a lot of people that come to TradingView, um, they almost, in a weird sort of way, they can't see the trees through the forest, right? And I used an analogy earlier today, which I really like, um, where the fundamentalist and the technician, like I call myself a rational investor, right?
Yeah.
That's sort of my moniker,
Yeah.
where hopefully you can see my website, where this green circle in my moniker here is the technicians, and
Right.
the red circle is the fundamentalists. And rational analysis literally is the intersection point of the two schools.
Yeah.
So right now I can understand we're making a good fundamental case for wanting to own and be involved in Bitcoins.
Right.
However, I do not believe we can make a technical case to be long Bitcoins. So we as rational investors really want to concentrate on where the both camps agree. That's where the trade really develops.
Yeah,
And
but
what
let
I
me ask you a question. If part of your oil trading, for example, was the wild card that there was a 30% chance or 20% chance that each barrel of oil you traded could be worth 17,000 times its value in 10 years, wouldn't that alter your trading?
Absolutely not.
It
Absolutely
wouldn't.
not. No, because as a trader, right? I mean, keep in mind, I trade crude intraday. I can't even hold these contracts overnight, right? I use day trading margins. So as a trader, All I'm concerned about is, does the setup that's currently in play give me at least a 66% chance of me seeing a 2-to-1 reward over the amount of risk that I'm willing to take off of the setup.
Right, but then the question becomes, your 2-to-1, that's priced in present day dollars. So, for example, with Bitcoin, your 2-to-1 ratio might be from $460 down to $430. If you lose $40. And stretch into the future, you still lost $40 if you've lost that trade. But stretch into the future, the win can be $40,000.
Well, all I'm looking at is just strict capital gains on the trading unit itself. I mean, I suppose you could argue that I could go and buy crude oil contract anticipating a big break in the US dollar, and because crude oil contracts are valued in US dollars on the exchange that I trade, the NYMEX, that crude oil contract by default has to go up in value. Right? Do you understand that?
Yeah, yeah.
So you could take that same logic, right? This Bitcoin unit that I'm looking at happens to be in, U.S. dollars, right? That's this BTC USD. So if you take the argument that the U.S. dollar is collapsing, well, that in itself would be sort of your justification for the Bitcoin going up. But as long as the Bitcoin itself is making lower highs and lower lows, then technically speaking, it's not going up, right? Technically speaking, it's going down. And so as a result, as a trader, I can't take that risk of being wrong.
But here's what I'm trying to say to you is when you take that risk, you're only risking today's dollars, okay?
But keep in mind, I have to have my position closed by the end of today.
Yeah, I got that. But what I'm trying to say to you is that there's a fundamental difference. If you do recognize on a rational basis that due to the scarcity of Bitcoin and the profound fundamental change it's going to bring to a number of different industries, that the value of Bitcoin will be 20 times what it will be today.
That's fine. And like our camps, right? We've got the red camp there, the fundamentalists. So that's basically, you're making that fundamental argument. And that's fine. That's totally cool. What I'm saying as a rational analyst is I want to only participate when both camps agree. So we're making an excellent argument for the fundamental story of Bitcoin going forward. And that's great. I'm concerned, as I said before, I don't know, like I run several algorithms, and one in particular, it hunts specifically for high valuation plays. So, this one algo that I trade, and it's just awesome, it specifically looks for stocks that are trading below 10 times earnings. It looks specifically for stocks that are trading below book value. It trades specifically for stocks that are sitting on big cash positions, at least 1 times cash in this argument. Really, I like 3 times cash, but that's here and there. So, and this is getting back to the original question that I asked, is can anybody actually give me a fundamental value for one of these coins? Is it 5 cents? Is it 10 cents? Is it $100? Is it $1,000? I don't think anybody can actually give you a hard number of what one of these things are worth. It's getting back to that sort of perceived value, right?
Well, but the thing is, though, it's not the Bitcoin as a coin is just a very small aspect of what it actually is. As a coin, it's a coin, but what it is a protocol. And so your real question is, what is the value of a piece of the protocol?
Yes,
and
yes.
It's like saying, what is the value of 1/21 millionth of the internet? You see what I'm saying?
No, because the internet is a whole bunch of different things. This is specifically a vehicle used to transact business, right?
No, but the internet is a protocol. It allows Joe Blow to sit down in Venezuela and do something with Mary Sue in, Vietnam. It's a protocol that allows a network to function, and that is exactly what Bitcoin is at the core. It's a protocol that allows a network to go over the entire globe, regardless of borders, governments, whatever else. And so a Bitcoin is not a coin. a Bitcoin is a share, a 21 millionth share in a protocol. If you see what I'm saying.
Yeah, I
And you
understand what you're saying. Yeah. But
so the
again,
real
how do
question
we
is
put a value on that? And I
exactly.
don't know what the answer to that is.
Well, it also brings to a new question is that I think you've got a market where there's two very different kinds of individuals operating. You've got the speculators who are definitely in it for the money, and that's their main focus. But you've also got an entire group that basically are there because they see the protocol and they realize that what they're doing is investing in a protocol. And so you've got a lot of different motivations, very different motivations from two groups in a very intense market situation.
I totally agree with you. Totally agree with you. So just getting back to my basic premise,
Yeah.
uh, we're making the argument that Bitcoins fundamentally can be justified and they're good, right? We've made that argument. It's locked. A rational analyst basically says, okay, fine, I like the fundamental story, but show me some technical evidence that this is actually a buy right now. And the long and short of it here is that, and you can take technical analysis courses out the yin yang. The basic premise of all technical analysis is just that we want to see bullish action shows higher lows and higher highs. Bearish action shows lower highs and lower lows. And that is technical analysis in a nutshell. It's just that simple.
I
Whether
would,
you
I would, I
apply
would, I would, I would posit that that's technical analysis of today's value, which is a
well,
very narrow
yeah.
kind of today's
When
value.
you look at technical analysis, right? I mean, all you're doing is you're just looking at what's actually happening in the real world at this moment. So I can't debate that with you.
I don't know, but I mean, in the real world at this moment, you've got an amazing amount of venture capital and startups and a lot of stuff going on that's also equally valid as these, $200 blocks going on in the market. You see what I'm saying?
No, I don't. Can
You
you
know.
explain that again?
Well, I would say to you that, you say that you got to focus on what's really happening in the real world. And my point to you is that, for example, in the real world, you've got the largest mobile operator in Kenya, M-Pesa, with their mobile money system, beginning to integrate Bitcoin with their payments across Kenyan borders to the rest of Africa. Okay? Now that's happening.
That's more of that fundamental justification, and that's fine. That's perfectly fine. What I'm saying, and keep in mind, right? This is what I'm talking about is I'm a potential investor in Bitcoins. Okay? What is it that I need to see to take me from being a potential buyer to actually buying this thing, right? We know that the fundamental story is out there, right?
Yeah.
All I'm saying is to get me to take my wallet off of my hip pocket and actually spend money on this thing and go and buy some, I need to be able to see a rational backdrop. Like here, we'll give you, like I said, and I'm not making a comment on the long-term justification of Bitcoins. I'm not making that comment whatsoever. I'm looking at this strictly as a trader who wants to make capital gains. That's all I'm looking at this from.
So you're interested in making the drop or the gain in value of a trade.
That's right. That's all I care about. I don't care about
Okay.
anything else.
Okay.
So, like, for
So
example,
what you've done is very neatly cut out the part that $200 or that say 3 Bitcoin gain in a trade probably very likely will be worth $40,000 each 5 years from now, so that a $200 swing means $180,000, whatever it might be.
well, so, and you can look at bigger pictures, right? I mean, here's the US dollar over a 20, 30-year span,
All
right?
right.
I can make the argument that the US dollar is going to get cut in half here. That's a big drop.
Yeah.
Does that mean today I go out and sell all my US dollars? Well, that is more of the technician coming in and sort of trying to fine tune exactly where it is you're going to put these positions on, right? Because
Yeah.
let's take the U.S. dollar, right? We had this big drop here, boom, 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 right? The technician sees a little double bottom here. So, like let's say we're having this conversation on, and I'm just going to pick a random day, boom, this day right here, right?
Yeah.
Our fundamental story is that the US dollar is heading down here. But technically, we actually had a little bit of a bullish breakout. And, if, applying a little bit more, technical analysis, we could probably make an argument that we should have seen some sort of retracement here. And this is actually the real value of the technical tools that I really like people to learn, is that the hedge fund managers, they see this low coming, right, way down here.
Yeah.
But are they going to short and sell all their US dollars and bet the farm that yes, the US dollar is going to fall half in value? Well, it turns out that hedge fund managers really follow this concept of the optimal trade entry, and that's the 61.8 to 78.6 fib. This is very, very significant stuff.
Yeah.
So if we look at this price action in particular, here we are, we sold at 78, and we're just getting our lunch handed to us.
Right.
And my client's calling me up going, Brian, I'm taking all my money out of you. You suck. You're horrible. You're shitty. You're terrible. No, this fucking fundamental story, this is terrible. You're an idiot. You're a loser. You understand what I'm getting at?
Yeah.
All right. So excuse my French, and I didn't mean to be so vocal. The point is that it's only here where the fund managers say, all right, time to start hitting this thing. We fully expect that by 2017, the US dollar is going to be down in the 40 tick range. But we can only start seriously looking at shorting based on technical work at this, and I like to call it the sweet spot, and actually I don't like to call it. Michael Huddleston's the one who basically does the videos that I espouse to. We can only start seriously consider shorting at 86 and change. So here I am, short from 78, getting my lunch handed to me. My clients have all deserted me. We know that fundamentally it's worth way down here, but now I'm out of business. And now the institutions are coming in and starting to short. You follow me?
Right.
So, as a trader, I don't have the luxury of just sitting around and just saying, look, I know this thing's we're going to be worth $30,000 a coin 10 years from now. Because I've got to run a business on a short-term basis. So same thing here. I can make the argument that Bitcoin's really, and on a long-term basis, we could, I mean, this is just insane, but it is there. You can make a trend line off of these peaks, and should we ever break out of this $1,000 high, you ready for an upside target?
Yeah.
Our next stop is somewhere along this trend line. But you got to have deep pockets, and you got to have lots and lots of patience, right? But I would argue that your next cycle peak, and then you could start drawing durations. How long did this consolidation take to occur, right? So this consolidation, if you just, a lot of cycle guys like to look at this. So that's the last cycle peak. So if these cycles continue, our next cycle turn will probably be somewhere here, right? And your signal to get long will probably come somewhere in here. Would probably break out like that. And your next technical target is way up here, somewhere along this trend line.
Well, and that brings us back to kind of the one of the original points of our discussion, is that I think there's, and you're the expert. I'm a total amateur at markets. I had no interest in markets at all until I got into Bitcoin. Okay, but my
Yeah.
point is that I think there's a fundamental warping of what is actually happening with a lot of people call it the exponential curve. It's a fancy way to say that it's going to go up very fast. But in terms of the paradigm shift that's happening both financially, technologically, and so forth, that it doesn't really function maybe according to the classical lines of charting in terms of that way. You look
That's it, and that's a kick in the pants when it comes to asset prices.
at
And trust me, every damn cycle is the same. As soon as someone says, "Oh, but this time it's different," I know for certain it's exactly the same as always. I
yeah,
know
well,
it sounds that's hard for you to stomach, but I've heard at least a half a dozen times in my 20 years of doing business, people say add $1,000 on this silly Bitcoin. That's when they say, "Oh, this time it's different." Oh, but this time it's different. I mean, I heard it through the dot-com boom. I made reference.
well, for several firms in the dot-com boom, it was different. They did have exponential growth and exponential valuation growth.
Right, and I don't know whether you've heard of a company called Nortel Networks. That
Sure.
basically it was the Canadian market darling through that dot-com boom,
It
and
was a
now
telecom,
and
right?
now the son of a bitch is out of business. I mean, the shares are worthless.
That was telecoms, wasn't it?
Yeah, well, Nortel Networks, right? It was they actually. What's funny, the story there is, I used to sell fax paper over the telephone. I mean, talk about a shitty job. Back in the late '80s, early '90s. I don't know whether you remember fax
I
machines
remember
back
the
then.
economy there.
So that they used to use thermal paper, and it was a very specific paper.
Uh-huh.
And every day I went to that damn job, I stared at this goddamn Nortel telephone. Back then, they were a telephone equipment manufacturer.
Uh-huh.
In fact, the Nortel itself was spun off from Ma Bell when they broke up the big telephone conglomerate. So in 1996, I think, they went and bought a company called Bay Networks, which was basically a Silicon Valley networking company. And then
Yeah.
all of a sudden, Nortel Networks emerged as the big internet player, and they were Canada's sort of internet player proxy. At one point, that one stock, listen to this, one stock represented more than 35% of the Canadian capital markets. One stock. So, and that in itself is a warning sign. We just have a simple analogy. Whenever one sector represents more than 35% of an economy, that's a bubble.
Right.
So if you do the math, then that means that these bitcoins, these cryptocurrencies, if we just keep the North American economy the same, and we'll use the U.S., at $12 trillion, that means these cryptocurrencies, you'll know that the top of the markets here, when the entire cumulative market cap of these cryptocurrencies approaches what? I guess 4 trillion, somewhere in that area. What's a third of 12 trillion? I mean, let's assume normal growth. So let's say the economy gets up to 15 trillion. So 35% of 15 trillion, you basically could justifiably say this is a top if the combined market caps of all these cryptocurrencies hits, about $4 trillion, somewhere in there. So we got a long, 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 long way to go.
Yeah, and it's not just that. It's a question of look at the population of the Earth, 7 billion, and unbanked 4.5 million are unbanked, no bank connection at all. But of those 4.5 billion, 2 billion have access to a cell phone. So the numbers here are staggering, and that's my point. Is that I think that this is I totally get what you're saying about they all say it's that can be opportunity, blah blah blah. But this is like an entirely different paradigm of what is possible in terms of Bitcoin because of the network effect.
Well,
And
no. I would say that, I mean, we just did the math, right?
right. So
Everything here fits. It all fits.
yeah,
So it's not, this isn't anything different. It's not anything new. But the
but
key
you
is
don't believe you can
that
bake it into your technical analysis.
pardon me?
But you believe that belongs firmly on the fundamental side and not on the technical side.
Well, all right. So we've made the fundamental argument for the story, and that's great. Perfect.
Right.
Now the tech, and this is I originally made reference to this. Think of our little circles here, right?
Right.
Fundamentalists on the red camp, technicians on the green camp. We only really, and keep in mind that what I'm specifically interested in is capital gains, right? So we really only want to take a trade when these two line up. Now, let's not incorporate my crude oil trading into this, because frankly, on a daily basis, we don't even look at fundamentals. Fundamentals are a complete waste of time, right? So day trading fundamentals is asking for trouble. So as a day trader in the crude pits, I'm 100% technicals. Now, having said that, right, as a investor, right, the Canadian rational investor, as investors, we ideally want to have these rational ideas. And so when we look at Bitcoin, we make the wonderful fundamental story. It works, right? And there's lots of potential. We've got the long-term cycles helping us. We know that market bubbles usually happen when a third of the economy is headed in one particular direction. So there's lots of upside for these things. Fundamental story's great. Now, if you look at the technical story, I'm looking at this BTCE weekly, right? And I can see a couple technical problems. So right now, the fundamentalists are saying one thing, but the technicians are saying something completely different.
I get what you're saying. Absolutely.
All right. So every once in a while, I come out with a pound the table buy signal. You gotta buy this thing, right? And usually that happens when we have an awesome fundamental story and we have an awesome technical story. So an example of that recently was these Brazil plays. I don't know whether you're watching Brazil or not.
No, that's a little bit of I think the last part of your podcast had to do with you were interested in the Brazil stuff because the World Cup coming up and stuff.
All right, so this just happens to be one Brazilian stock, right? This GFA, Gaficia. They're in building, and if we look at the fundamental story on our fundamental screener, the fundamentals were screaming at us back here, right? And my little algorithm was jumping up and down.
Right.
But technically, this was awful price action, right? Money's still flowing out, no real momentum bottom, not washed out. You got a head and shoulders top here. So technically, the technicians just weren't on board at that point. Technicians, remember, just keeping our just basic principle that bulls in any market at all, bulls need to see this type of action, right?
Right.
Basically, higher highs and higher lows, right? At that point, the bulls will start getting, or the technicians will start getting bullish. So we look at our Gafsia. So fundamentally, it was making this story here. Now look what's happened since. Now we're starting to put in higher highs and higher lows. So now we have a fundamental story that's awesome, and we have a technical story that's getting better and better by the day. So we look at, and I don't know why that Gafsia chart's not blowing up, but if we look at the GFA here now, oops, geez, I never put these symbols on right. All right, look at what we have happening now. So remember, our fundamental screener started getting excited here. After that event, look at this. And it's, let me see, I just want to make sure the scale's right. So after the fundamentalists get all excited, oh, by the way, look at what we had happen here. Price went down, then up, then down, and then up. There's bullish price action.
Right.
Same thing after our screener. Price went down, up, down, turned. Nice. Almost a breakdown here, but look what's happening now. Down, up, down, up. So this is a situation where we have awesome fundamentals, and now we have awesome technicals. I mean, clearly, you know, it's not a coincidence that these floors come in here at these levels, right?
Yeah.
I mean, other fundamentalists look at the fundamental numbers, and these are very compelling fundamental numbers, and they say, oh, I'll buy that. Oh, I'll buy that. And they step in and buy here. And what ends up happening is, you know, and all these M's and W's is they are a graphic representation of supply and demand. Do you understand that?
Sure.
In essence, if price cannot make new lows, then it means that demand is overwhelming supply. Again, demand is overwhelming supply. When I look at Bitcoin right now, what I see is supply is overwhelming demand.
Definitely.
Supply is overwhelming demand. Supply is overwhelming demand. You know, and then if you think about the fundamental story, you know, anybody who had coins in Mt. Gox, you know, if they even have a hope in hell of getting any of those coins back, do you think that they're going to hit the bid? I think so.
I totally get you. But that leads us back to that same thing we talked about, which is that divergence of why it is that you've got, you know, 10,000 coins in bids up to 430, and then only 1,200 coins available all the way up to 470. You know?
Well, again, you got to. Okay, so now this is getting into real slick trading, right? So this is a 4-hour chart, right? If we zoom in, the question is, do we have any M's or W's forming on the lower time frames? And keep in mind, when you're looking at a depth of the market like this, I mean, are you looking at Bitcoin Wisdom? Is that what you're looking at?
Yeah, I use Bitcoin Wisdom mainly, yeah.
All right, and you're looking at the
15
BitFinex?
5 or 15, yeah.
So this is what you're looking at here?
Right.
All right. So keep in mind that a lot of these players, you don't know what their time horizon is, right? Yeah. And what I see when I see this is, you know, there's 380, 385, 395, 395, 400. I see a lot of chunky demand down here, right? Yeah. And then it slowly trails its way up to the current market. And same sort of thing, you know, not so much supply, but as we move higher and higher, more supply comes on stream. But if we look, again, keeping in mind that harmonic idea, and maybe what I'll do is we'll load a new chart. And I suppose we could probably look at the, can I get that BitFinex or whatever here? Let's see what happens. BTC, USD, BitFinex. All right, and we'll just zoom right into a real short-term time frame. All right, so all the principles that are at work on these higher time frames, they also apply on the lower time frames. So you could make an argument harmonically that this needed to be cleaned up. So you had the rally high to the rally low, or the sell-off low. So, you know, the question ultimately here is, if you're a hedge fund manager and you're bearish, are you going to sell down here? No fucking way, right? you're going to wait, excuse my French, I just swore on YouTube again, they're going to hate me. You're going to wait for the optimal trade entry window. Now, in this case in particular, it just so happened to come in on a nice 61.8 tag. So there probably were, big players hitting that offer there. Now, what I see at the moment is you could make an argument now going the other direction. And this is traders, right? Traders trading, chart and charts. You can do this all day long, right? And all this is the harmonics of the market. So if you are a buyer, right, you like this level down here, for some reason on a higher time frame it got you excited, are you going to buy up here? No way, right? Where are you going to buy? You're going to try and buy in the optimal trade entry window, which is down here, right? And so this basically is what makes a market. So you got guys who want to sell up here, you got guys who want to buy down here, right? Yeah. And this game goes on and on and on repeatedly. There are different time frames, there's different perspectives. As I said originally, my thesis all along was that if this low is for real, then this area should be support. We may find that the market might rally back into this window and carve out what they call inverted head and shoulders, which looks something like this. Inverted head and shoulders, it would be neckline, shoulder, neckline, head, neckline, shoulder, breakout. Right. All right. Where your trade signal to believe that this is for real comes on a breakout through the neckline, right? And then there's our double bottom, right? This kind of action, right? You follow me? Yeah. So we might very easily be doing this. So shoulder, neckline, head, neckline, shoulder, away we go. That's very possible. But as a technician, it's dangerous. In fact, it's suicide to assume that that's what's going to happen here. Yeah. Does that make sense? Yeah. So as a technician, for me to get a rational trading idea, keep in mind that fundamentally we're on the bull's camp, right? Fundamentally, the vote's already been laid. We are bullish. We're just waiting for the technicals to catch up and to tell us that, yes, indeed, we're technically moving higher. Right now, all I see are lower lows and lower highs. Remember, getting back to supply and demand, that in the short term, supply just keeps overwhelming demand. And now the news that China is basically telling its citizens that they have to sell all of their Bitcoins by April 15th, well, what a coincidence, right? Supply is overwhelming demand right now. Does that make sense? Definitely. All right, so I'm all on board with you on the fundamental story. I'm still a little bit leery about what an actual fundamental value of one of these coins is, but I can see sort of the longer-term implications. Now, that longer-term fundamental story will get into big trouble technically if we start breaking through these lows. Right?
Why do you think that?
Well, because what will end up happening is this is what's called market structure. So over a long-term basis, we have a low, rally, sell-off, higher high. Right? There's our W. Does that make sense? Do you see that?
Right.
All right. What concerns me right now is we have high to low to high, lower high, right? Right. And then we got this meltdown, and I don't even know if this is for real or not. Yeah. If we look at, let's look at your BIF and X, see if it looks the same thing. Excuse me. All right, so same thing there. And I guess this thing hasn't been around as long as BTCE.
I don't know. I just got into the game about 6 months ago, so I'm
Right.
pretty new to it.
So clearly we have a floor here, right? You can see how that's a floor. Um, if this floor was broken, what is that? Is that 0? I don't even know what the hell that is. Did this thing actually trade to 0? $1.
There was a spike, a freak spike, and I think it was only on one exchange. It was on BTCE, I believe.
Oh no, that's that one to there to $100. So the long and short of it here, like our Nortel story, right? I mean, Nortel's chart looked exactly the same as this. No big surprise. And if we look at like our GAFSIA, right? If we go back over time, it looked exactly the same. Because remember, this was a housing stock, right? So all the housing stocks went nuts. Oh, this thing doesn't have trade history. That sucks. Oh, how can I show you one? Well, that'll be for another tutorial. What I see right now, right, technically speaking, is lower highs and lower lows. That's not good. We do have the potential, now we're looking at higher highs and higher lows. We might, if we're lucky, be forming a low to a high and a low that's higher and testing it. So we might actually be in the process of forming a technically bullish scenario. It's definitely possible. It's out there, right? So, on the downtrend line, if we start closing above here, that's basically this scenario, right? And then away we go, off for the next leg. We did sort of our cycle analysis. Oh, did I lose that chart? Crap. But we figured that, oops, what did I just do there? BTC USD, let's see if I can get it back. Yeah, so we figured, other way. Cyclically speaking, what am I doing here? This last cycle was just in, what is that? That's April to November, right? And actually probably here, say October, right? So that's basically 6 months. So this is November. 6 months out would be like June, right? And what a coincidence, there's June. Cycle-wise, I think this thing still has some time to fill in this area, right? Having said that, though, if we can start closing back above here, right, which would break this trend line, then away we go. I don't think that's going to happen, but if it does, then you have to respect it. So
let me ask you a question, because your background in terms of oil and the oil trading and so forth.
I've traded everything, anything and everything under the sun.
Okay, then that's just a general marketing question.
Yep.
If you say that the value of Bitcoin is twofold, to speculators is the value of a unit that is, as of today, basically a currency unit. But in terms of the reality of Bitcoin, it is a unit of transfer and a protocol, and so that has no connection to the actual monetary value of the protocol. The protocol will function whether it's valued at 1 cent or $10 or $1,000.
That's what worries me. As a speculator, that's what scares me.
Well, but here's my question. You see, so when you say market breakdown, I get that. I totally get what you're saying, and that's going to be a rainy day for all the speculators and so forth. But to the actual function of the network, it would seem to be a different question, because
doesn't mean jack shit.
Right, and if the miners can't make money anymore, some will quit, and then the difficulty of the hash rate goes down, and so it becomes just as profitable to keep going, even though Bitcoin's only worth $1 instead of $100, whatever. So that's, again, I see this dichotomy between the speculative world of Bitcoin, which we're all running around like hens with the sky falling, and the actual world of Bitcoin, which is actually out there and existing parallel, which to me just does not seem to get baked into the value that most speculators are putting on it right now. To most,
Absolutely. I 120% agree with you. But the problem with that is, you know, you can still do business online with Bitcoins if the current market price for Bitcoin is 7 cents,
right,
right?
right,
You can still, you would just market to market based on whatever the current conversion is, right? So instead of, my newsletter costing you a half a Bitcoin, at $500 a year subscription, right? $300, let's say. Um, at at $3 a coin, it's going to cost you 100 coins to subscribe to my newsletter, right? Does that
right,
make sense?
right.
Now, that's a very interesting testament into itself. I'm not making an argument for the justification for Bitcoin's existence. Not making that argument whatsoever.
You and I are absolutely on the same page on this entire thing. It's just I find it very interesting the basic question of whether this is just like a commodity, just like any other, and that's what we're exploring here: is whether or not Bitcoin is the same as oil or grain futures or whatever else in terms of where do the differences come in, both in terms of the people who are involved in the market and in terms
Well,
of the.
I would argue that it's not a commodity yet until it has to be used. Now, I'm seeing some very interesting developments. Like, I think the country of Iceland, they're actually going to pay people in their Icelandic Bitcoin. Have you heard the Iceland story?
Have they started to come on board with that?
Yeah, they're going ahead with it.
I was in on Aurora Coin at the start, and I had a lot of hopes for that, but it seemed like the development was just not keeping pace, and I got out of it.
Well, anyway, so I'm no expert, right? But I just
Yeah,
find it fast, and that's the catalyst, right? That's the
sure,
catalyst that
sure,
takes it from it being a novelty to somebody actually having to use it. When
sure.
like a bushel of corn, right? It has to be used as a food source, and thanks to George Bush Jr., they actually turned it into a fuel source too, which just exacerbated the situation. They had no business turning a staple that we humans need to survive into a fuel source, and I would argue that's why the stupid price of corn is so high right now. But that's here nor there. Something like a barrel of crude oil. If we figure out a way where everybody in North America can drive a Tesla, crude oil will collapse,
Correct.
right? Because it doesn't have to be used. Its commodity value will basically evaporate. And there's lots and lots of stories over history where commodities were very, very highly used, and in a very quick period of time, they became basically worthless.
Yeah.
So that's the key with this Bitcoin. Right now, in my opinion, it's a novelty. And you also have to remember, too, the Chinese love to speculate. I mean, it's literally written into their DNA.
Yeah.
So this whole Bitcoin nonsense just fed right into that. It's like it's part of their culture. They love to gamble. So what I see here is that this is a speculative instrument right now. Now, if we start getting things like IRS rulings about proper taxation, and we start getting apps that are developed to help consumers deal with that taxation and the bookkeeping of all this, if we start getting governments that basically publicly endorse and tell people that they're going to pay them in whatever the Bitcoin du jour is, then it goes from being a novelty to actually being a commodity like you talk about.
Right. Yeah.
The only reason why the fiat currencies exist at all is because people have to have some sort of trading unit to trade in individual countries.
And also they have to be able to trust in something. They trust in their own government. That's the default unit of trust is one's local government. And
Yeah,
that's what.
well, and that's debatable in itself too, eh?
Well, there you go. And that's my point. Is that that's one of the paradigm shifts that's happening, just in the last few years. Is that it's a trans-border sort of thing where people feel like they're connected in a way that's not based on nationality, but it's based on technology and based on social networks.
Right, but they don't have to use it,
They
right?
don't, but
So
they
what
choose
I'm
to use
saying,
it. It's
now
even
it's
more powerful.
it's a choice, and what I'm seeing is, this reminds me very much about the early days of the internet. I was a broker through all that period. There were lots
Right.
of naysayers back in the early 90s that just were like totally poo-pooing the internet. Right. So and there were lots of people, Warren Buffett, for example, he's probably the only one that survived. But there are lots of people that say I would never touch any of this shit,
Yeah, yeah.
you know? And when you ask them their opinion, they will swear. They will say, "No, this stuff's crap." So, I mean, I could spit up lots of news articles about this analyst or that analyst saying that these cryptocurrencies are worthless, yada yada yada, right?
Right.
Um, and that's what makes a market, right? I would argue that there are a few things that need to happen for the next evolutionary process. I think that you need to have some sort of North American regulated market. The bitcoins themselves may not be regulated because they are relatively hardwired, but I
Right.
wouldn't be surprised at the end of this cycle, 2017, 2018, we hear about some horrendous scandals about these bitcoins, or whatever coin it is. I just say Bitcoin because I'm just generically speaking. In fact, I would guarantee there will be some just colossal scandals about these things.
Yeah.
Hell, we've already had some right now already, eh? Um, so, what I see is I don't see anything different. I think everything is, this is just very normal. And unfortunately, it's my opinion that the market's just slowly washing people out. Everybody who got a Bitcoin in their stocking for Christmas last year, we got to get those Bitcoins back in the smart money's hands.
Yeah.
You know. Um, this, just so you know, and I really like this conversation. It's totally awesome.
Yeah,
But
I feel like I maybe hijacked a little bit. Sorry about that, but it was definitely interesting to talk about some of these things.
well, so my comment is I appreciate the chat. I wouldn't mind. I'll publish this Bitcoin chart that I've just have on the screen here, and I wouldn't mind if you could maybe I don't know. Are you a member of the TradingView community? How did you
Yeah,
get
I'm
here?
the one that sent you that message about the editing the film and stuff.
Oh, cool! Hey, you're the guy. Yeah, I should be kissing your ass.
Hey, no worries, man. I've been learning a lot for you too.
So, what I'd love is if you could just post a little note on the published chart. Just, your thoughts about these
Definitely,
tutorial sessions and whether you found it of
definitely,
any value. Um,
definitely.
and just keep in mind that these toots are supposed to be 2 hours long. So we're now 3.25 hours into this. So I think I'm going to wind it up here.
Yeah,
Uh,
I was kind of feeling bad about that.
don't worry about it. If you enjoyed yourself, that's the whole point of this. And what I would appreciate, like I said, is if you could just drop a little note. Would you like me to add you to the circles list so that you get a little note when these tutorials are open so you can come in
Yeah,
and.
I don't use the Google Circles too much, but I'm already on your email list, so that's going to
Oh,
work.
okay. Cool. All right, so that's done. And I'm always taking donations. I'm building up my Bitcoin empire. I'm at 0.74 coins now, just
I'm going to
strictly
tip you.
off of donations. So somebody, I've had quite a few donations, and I really appreciate it. And I've told the public that as soon as I get to 2 coins, that's when I will start trading this thing because it just doesn't make sense monetarily to be trading. Like at I think I was up to like zero point 0.6 or zero point 0.7 coins, and it represented a grand total of like $300. And I mean that's the kind of money I make on one crude oil trade. So it really doesn't make sense for me to waste a lot of time and effort on trading these things with such a small incremental amount.
Yeah,
But I have basically I've
can't
told
you like sell one of your cars or something and put it all in?
Me?
Yeah, sure.
Well, so what I've told the community is I'm using the donated coins as the trading proxy. So anyway, I was a broker for years and years and years, and I used to drive sales managers nuts because I'm a horrible salesman. I can trade like the wind, but I'm an absolutely horrible salesman. Um, and so I'll just leave it at that.
All right.
So Robert, you had a question. Brian, a question. What sort of capital do you trade with, like in a range? If that's rude, please don't answer. I work with a prop firm, Robert, and they put up all the money. Um, I don't know whether you know my story or not, but 3 years ago, my wife passed away, and I have a special needs son with severe autism. So I basically, over that mourning period, drew down all of my capital. Um, I started to work for this prop firm because I don't have a capital base that I'm working with right now. And ironically enough, I would actually trade quite a bit differently. I don't think I would actually be a day trader, other than the fact that these guys put the money up, and they split the profits with me very, very handsomely. But it's a very, very small account. It's only like a few $1,000s. So, ideally for a guy like me, if I want to make like $1,000 bet, and if I follow my 2 rules of investing, then really I should be working with about a $20,000 stake. And I'm not, and until I get to that point, I really can't put a lot of my trading ideas into motion. So I'm working away with this prop firm. I mean, it's basically my income source, and I'm doing these tutorials and these seminars. Basically, I have a show on basically once a day now, almost. And my aim, if you will, is I'd like to make some money off of this venture. I've made it 100% donation because I don't like anybody to be forced to pay. But if you find value in the work that I do, and if you've learned from it, like I have one technical indicator that I personally developed called the Willie, and the TradingView community really loves it. And as a result, a lot of people gave me little donations just off of that contribution. So that's basically, I don't know. Does that answer your question, Robert? Cool. All right. So on that note, I think I'm going to wind this up. Great conversation, Have. Yeah, sure, if you want.
Hey, Brian, thanks a lot. I got to go, but I'm going to send you a quick private message in a few minutes here, okay?
Yeah, and hey, I want to talk to you more about, you mentioned talking about monetizing these shows and all that kind of stuff. I mean, that's music to my ears, that kind of
Yeah, no
stuff.
worries. Anytime, anytime. I did the film thing for a long time, so it's not that hard to do, and
Yeah.
you can get set up and easy. I think you're obviously, I mean, you're putting a lot of quality out there, and you can absolutely monetize it. But I think that you got to get out to a wider audience and put the product out there, and then it's going to just flow in.
I think, and that's what they say, right? I mean, I'm not putting a dollar requirement on this, but to get something in this world, you got to give. And so
Well, I mean, look at the Bitcoin Talk forums. There's a couple guys who have newsletters going, and they're having a nice group of people subscribing, and they give value, and they have a very good income from it. And there's absolutely no reason why you shouldn't be on that level. I've been reading some of their newsletters, and you're absolutely there. So that's what I was trying to propose to you, is to take what you're doing, which is actually a much more interactive product, and put it in a form that's quickly downloadable in a very digestible form, that people can get and use.
cool. Well, I'm all ears, and I want to talk to you more.
Yeah, message anytime.
Okay. So on that note, guys, I'm gonna call it a day. You got my email address there, Robert. So feel free to drop me a line if you like. And all the best. And if you feel like posting a comment on these charts, I'd appreciate it, because I like to have a little bit of a track record here. So have a great day, guys. All the best to you and your families. And same bad time, same bad channel. You can just go to my website and look in the Twitter feed, and you can see exactly when the next show's going to be on. All right.
Great. Thanks.
Okay, guys, take it easy.